Friday, March 3rd, 2017, Monaco 64, home of alternative economics and contrarian views. So this morning I'd like to talk about, excuse me, the precious metals market. Yesterday on Thursday, there was a big drop, especially in silver. We went from around 1830, 1840 area all the way down to 1765. Gold as well closed Wednesday almost around 1250, and we traded all the way down to 1230 yesterday, and it mostly happened after the European markets close, which is 4:30 p.m. London time or 11:30 p.m. New York time. I guess those kind of things happen because the markets become less liquid when the Europeans leave. So it's easier for the bullion banks and the people who keep the gold price under control to manipulate the gold price. And what I want to talk about is not the manipulation, because I think to get too tied up on that and to get too negative about that is not a good thing. You know, I get comments saying gold is never going to go higher. You know, they're under control. They're going to manipulate the price. I think that's a bad way of thinking, because it stops you from doing the right thing, which is saving in gold, physical gold. And, you know, it's a great insurance. It's out of the financial system. It's in your hands, right? It's not in a bank that could fail. It's not in a digital world, you know, that they want to make the banking system where they can switch off or have a glitch and you can't take your money out. So what I want to say, yes, I do follow the gold market, the gold price. Only because I think it's interesting, and I've been doing it as a habit, and I think there's a lot of people out there who like to trade, and they can trade, but in the end of the day, gold and silver are, you know, we've got some of these as well, $half, even have some $quarter, you know, 64 and before. They are for saving. They are to maintain your purchasing power for the efforts that you've put through in your life, in whatever activity you do. They help you maintain, you know, the value of your life throughout time. If you want to get rich, yes, trade it. But you can also get poorer by trading and speculating. Go into the mining shares. Very, very big opportunities, but very big, you know, dangers out there as well. You could buy a stock that goes up from $1 to $3 in a month, and then it comes back down to $1 in a couple of weeks. So, but gold and silver, they will always maintain their purchasing power. And the other thing I wanted to talk about, yes, the central banks, bullion banks, they do control the price of gold, but in the long term, they cannot keep a lid on it, because if they do for too long, they will actually lose out a lot of their holdings of gold. And gold is the biggest threat to the Federal Reserve note, the Bank of England note, the ECB note, the Bank of Japan notes. And by that I mean all the fiat money notes that compete with gold. And it's interesting that in the United States, gold, monetary gold or bullion or gold coins were made illegal to own from 1933 to 1975. You could own some collector's items, you know, gold collector's coins, and that was put in there by the Secretary of the Treasury in 1933. I think his name was William McAdoo. I'm not too sure. But he was a great coin collector, and when they passed the Confiscation Act in 1933, when it confiscated the gold and made it illegal to own, they made sure that they left a little clause about gold collector's coins been able to own those. So yeah, you could own those. You could own, I guess, some foreign coins that were considered collector's coins, like gold sovereigns. So that, the people in the know found a way to keep their gold. So it just goes to show that they don't think gold was a bad thing. That the reason they had to confiscate the gold is that people were rushing to get their gold out of the banks, and the system was collapsing, so they had to stop that. But going back to 1975, what happened January 1st, 1975, is that Americans were again, after 42 years, to own gold. Monetary gold coins, not just collectors. And what happened in 1975 as well, aside from that, in the beginning of the year? Well, the first futures contract on COMEX started trading. So you can see COMEX has been used to control the price of gold since, Americans were allowed to buy gold again in 1975. So what does that show us? It shows us that they fear gold, the people who run the system. And back, and you just have to go back to the LBMA website, and you look, they've got prices going back to January 1968. Price of gold then was $35.18. So why didn't they keep the price fixed at $35.18? Why isn't it $35.18 a day? Well, because they wouldn't have any gold left, especially with the inflation that we've had since then. So right now, the price is over $1,200. Can they manipulate it and control it? Yes, in the short term to some extent, but they can't do it forever. I know 1968 is a long time. It's almost 50 years. But, to give you an example, I've been buying a few coins here and there since 2002 here in the UK. I remember buying sovereigns back in 2002 for £50. That's a full sovereign. That's like a quarter of an ounce, £50. Nowadays, I'm looking here at my favorite bullion dealer in the UK online, and let's see, it costs for one coin, it costs now £256. So in in about 15 years, this has gone from costing 50 to buy and now costing 256. Was that a bad insurance? Was that a bad protection against, the inflation of the currency? No. I mean, buying houses here, yeah, it's done well as well, but you can't sell a piece of your house and cash it in. Of course, you could refinance it and get another mortgage, but do you want another mortgage? This allows you to cash in if you want. And you don't have to cash in all your gold, just one coin. So, and I'll go back now also to like 2008. I bought some gold coins, and I think, no, 2009, I'm sorry. And I bought some gold coins. And at the time, we were witnessing a pretty sharp correction down in gold. It was the time after the 2008, 2009 was a time after the collapse when gold went from $1,000 to like $700, and I went to buy some more gold sovereigns, and at the time I was concerned that it wouldn't hold. It was around 700 pounds an ounce, and this cost me 165. So, excuse me. Now it's 250. So what else? Well, about 2 years ago now, I bought some more gold coins, and again, the price was not doing too well, and at the time I paid 189 for this, and I thought, and it did go down below, back further down to like 100 and I don't know, 175, but now 250. So all I'm trying to say is that, yes, it's frustrating when we see what happened yesterday, but longer term, it's still the right thing to do. They will, you know, if they do, and by they I mean the bullion banks, central banks, the people who control the price of gold, if they can't really keep it down forever, or else they'll lose control of you know, the physical market, because the only way to keep it down is playing the paper market. And the other thing I wanted to say, the thing about gold, you see, you know, in 1968 it was $35 an ounce, and now it's over 1,200. If they allowed gold to just go up, you know, in a straight line to compensate for the cost of living losses of their inflation, everyone would be buying gold, because they would know that gold always went up, because, you know, their fiat currency always goes down. So, and their fiat currency does always go down because we always have inflation. You know, they talk about low inflation or deflation, but do you remember the last time that the CPI, which is a bogus measure anyway, and you can look at shadowstats.com to see how bogus this is, that is, do you remember the last time that the CPI was negative? I don't. So, you know, the fiat money is always going down. So normally, you know, gold should always be going up. But if they allow gold to go up in a straight line, they'll lose control of the system. So they need to keep, you know, it's just a game. They need to like pump gold up, pump down, you know, and then disparage it in the media as well. Say how risky it is to own gold. But they don't tell you that for the last 50 years, gold has been a great store of value, or even the last 15 or 8 or 10 years. They want to keep you in the now, in the 2, 3, 5 years. So yeah, that's what I wanted to say this morning. I'm going to follow the market still today, and see if I come up with some more ideas for videos. In the meantime, if you enjoyed this video, please give me a thumbs up. Share it far and wide. Subscribe to my channel if you haven't yet. And yeah, if you'd like to donate to my channel, there's some links below in the description. Take care, and I'll talk to you later. Bye.